Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. Generally, it's related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in there. Let's see what the market, what the social media is sharing about the market. At finding_finance, if you want to follow me, and finding-value.com if you want to join our community. LEAPs are coupon code if you'd like to join. And we've got a question and answer session coming up at 5 p.m. Sunday Mountain Time. So Tim Hack, he says gold has no resistance ahead. Total breakout. The crowd is still asleep on gold and silver miners. Buy before the floodgates open. Super tight sector. What did we see today, though? Because this was posted about 8 hours ago. We saw a slammy by, I think, potentially Mr. J.P. Morgan himself. There isn't much resistance up here. Why did we get so much selling pressure all in one shot? And that's what makes me think that something is going on, and it is coordinated across a lot of the precious metals, not just gold, which also makes me think that this stuff is all interconnected. But there is something. We did have a strong dollar today, and maybe that is what caused the potential selling. Maybe that's the case. But we shouldn't have too much resistance above us, because resistance is generally when somebody buys something, it goes down the price. And then when that price goes back up, they become resistance if they want to sell that asset or thing at the same price that they bought it. They'll say, oh, if it gets back to where I bought it, I'm just going to sell it and get out. Well, everyone's in the green now. Everyone's in the green. We opened up very strong for the Asian East markets. We were ripping. And I think someone got afraid and they said, you need to bring that price back down immediately. And I think that's what occurred, in my opinion. Now, here's the thing. Are the paper markets going to beat the physical markets? No, the physical markets are going to overwhelm the paper markets at some point. Are we at that point? No, we're still probably early, but I think it's gonna be a big move to the upside when the physical markets overwhelm the paper markets. China is holding their gold and silver price above the COMEX price. And what that is doing is it's sucking over all of that gold and silver to the east because of the price differential. It's going to drain the COMEX and LBMA. And that's what I think their plan is to do. And I think Saudi Arabia is probably holding oil a little bit on the low side. And they're going to put us into a very big inflation. I think that's it's not just them. It's us too, manipulating the market and trying to game the entire market. It's not just them doing that, but it's part of it. Stanley Druckenmiller, I want to read this. He says, I'm constantly fighting my bearishness about the world. One of the great hedge fund managers of all time, Bob Wilson, greatest short seller ever, said he made 90% of his money on the long side. The math just works against you. If you're perfect on a short, you can double your money. But if you're wrong on a short, you can lose 10 times your money. If you're dead wrong on a long, you lose your money. But if you're right, you can make 10 times your money. It's a mathematical inverse of that with shorting. You don't have to be a rocket scientist, I know. Therefore, that if you have a bearish bias, you have to be very aware of it. You have to work around it, and I always have. Now, what they're talking about is asymmetry, and that's why you go long, and you don't want to short because the symmetry isn't in your favor. It's exactly what they just described there. So I'm a long-only person. I don't see why someone would short, because the symmetry is always against you. And yes, it can fall faster, but I still don't see that as the reason to buy or to short something. I do not have a bearish bias. I have a optimistic bias. I always look at the good things and I try to ride it up. I do take losses with absolutely no problem taking a loss. That's just the way I am. And I'll just move forward with something that is making more money. So, I mean, that's my take on all that. Marion says, would you rather own 30 ounces of gold or one Bitcoin? I would rather own 30 ounces of gold. I would rather own, I mean, if this was like a long-term play, I would rather own a few ounces of gold over one Bitcoin if I couldn't trade them. I mean, obviously, I'd choose Bitcoin because it's worth more than a few ounces of gold. But I'm just looking at a long-term time frame. If someone said, in 100 years, would you rather own one Bitcoin or 30 ounces of gold? I'd say 30 ounces of gold for sure, because it is performed repeatedly over history for gold, and it's an element on the periodic table. Bitcoin, I don't know. I doubt that will last that long, but that's my take. EIA lowered its world production forecast by almost 1 million barrels per day. We now forecast significantly less global oil production than world oil consumption through the first half of 2024. It requires draws on world petroleum stocks. There we go. So we're drawing, and price will most likely go up. And this is what they've got for the deficits, the surplus, the deficit. And they have a surplus in 2025. I don't know where that's coming from, but okay. Rick Rule says, I think you are going to see stunning equity market performance from the better companies in the gold sector. I think we're going to see it in 2024. I don't think you're going to have to wait forever. But people that buy the whole sector will be disappointed one more time. HFI Research, he says, for those of you who think this is a real cut, please help me understand how you come to that conclusion along with the 5+ million barrel per day of headline cut. Because I just don't see it. I don't even know if the Saudi 2 million barrel per day cut is real. What headline versus one voluntary? And this is OPEC plus crude exports, which are basically running normally. Nothing's really been cut. Then we look over at OPEC plus excluding Saudi crude exports, and they're basically riding at almost all-time highs. So there's no cut there. And then you look at Saudi crude exports, and they're not really cutting. I mean, is this all they can produce, or maybe there's a very thin slice of spare capacity left? I know that they're doing a ton of drilling in Saudi. You can hear it in some of the drilling earnings calls, conference calls. I'm curious to see if we're all just flat out and they're just jawboning it to keep everybody calm. Maybe OPEC is running flat out. Maybe they don't have the spare capacity that everybody thinks they've got. I don't know. Freight futures, AM update, Capesize and Panamax 7%, 3% respectively, just massively up higher. And then VLCC was down 2% for the tankers. Eric Nettle says, even assuming weaker demand growth than OPEC is forecasting, in a return of some of OPEC's currently curtailed volumes, global oil days of supply looks to end 2024 at a record low. And using historical regression is suggestive of Brent exit price greater than $90 a barrel. Our base case remains $80 WTI. And that's global oil days of supply continuing to go lower. They are forecasting even further draws, and the price of oil working its way on up. Sahara says, this is for silver. Failure of a breakout by tomorrow's close will likely leave us a small-bodied weekly candle, which isn't ideal at a key resistance level. Therefore, would prefer to see a breakout this week, which would lead to a bigger push to month end for a monthly breakout and also a quarterly breakout because it is March. And there we are trying to break out right where we're at with silver. We are very close to a potential breakout here. And that's what we're looking for. If the market goes up 20% annually and inflation rises 30%, are you really getting ahead? No, you're not. And that's my whole point with the overall stock market. The stock market performs very well during certain portions of the business cycle, and we're late cycle, which means commodities generally do very well. So he's exactly right. You can make up these numbers, but if this number annually is less than inflation, then you're not making any purchasing power gains. Now, you could still come out ahead where if you've got locked in debt and you continually go up, that is increasing your purchasing power against a fixed rate debt if you have fixed rate debt. Cuppy says the whole periodic table is about to moon. Look at this chart below. It's the CRB index, and it's looking ready to rip to the upside. So Cuppy's saying, the whole thing, the whole kit and caboodle. Let's rip this thing. North Star says breaking news: confirmation now in. This is a global phenomenon. Currency debasement unmasked by gold yet again. So this is gold measured in world currency units. Big move, all-time highs, breaking against all currency units. And the projected move is the flagpole put up on here. Way higher. Brady says most are still doubting gold's move here. And that is why GDX and SILJ are not having 8 to 10% days yet. The largest percentage gains are always from the very lows. Profit is made when you buy. So GDX versus gold, you can see we are probably putting in a bottom here, or very close. This is a 16-year chart, larger gold miners versus gold, and then the downtrend line break and retest. Retested a few times. Patrick says there's no such thing as a crystal ball. Chart trading is about probabilities. Gold outperforming inflation is increasing the probability silver can break out. So here is the charts that we've got. Gold adjusted for inflation is broken out to the upside, and silver follows gold when it does that. So I'm pretty convinced that silver is going to rip because gold has already broken out, and silver just follows what gold does. So I think it looks good. Let's see silver rip. I'm loaded to the brim in this stuff. So let's hope it goes. Speaking of silver, been saying for 11 weeks that gold has a blue mega breakout. Silver now has 6 days to the quarterly close in a blue mega breakout. So a breakout's in the making for silver on a quarterly basis. And hopefully we can close and get up here a little ways. So it's a clear break on silver. Now, gold's already broken on a monthly, on a quarterly break here. It's gonna be broken out. I highly doubt we're gonna go down that much. So gold's broken out. I'm sure silver's gonna follow next. So that's all I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. And we'll catch you next time. This is Finding Value.